What's up guys? Jay Costa here. Welcome back to the channel. So a few weeks ago, I shared a video on YouTube about a home equity line of credit, or a HELOC for short. I've been getting plenty of questions from you guys so far on HELOCs and my experience with it so far. The most common question is, Jay, should I get a HELOC or a cash out refi? What's the difference? Well, that's what we're gonna go over in today's video. HELOC versus cash out refi. I'm gonna go over what each one is, the pros and cons of each, which of the two I prefer after my experience with my HELOC, and I'm gonna go over some steps on how you could decide which one is going to be right for you and your situation. But first guys, before I start this video, all I ask is that you smash that like button down below. It really helps me out with the YouTube algorithm and growing the channel. Also, if you get any value out of this video at all, please consider subscribing. Would greatly appreciate it. On this channel, we talk about investing, real estate, crypto, stock market, and just general entrepreneurship and financial freedom. Now, onto the video. Okay, so as I mentioned, I already created a video on what a home equity line of credit is, my experience in obtaining one and how it kind of works. But just in case you didn't watch that video, which I will link in the corner up here, what is a HELOC? Let's go over it. A home equity line of credit, or a HELOC for short, is a bank program that allows you to access the equity in your primary residence home basically as a credit card. The equity in your house is the value of your house minus any liens or mortgages that you owe on the property. So as an example, if your house is worth $500,000 and you still owe $300,000 on your mortgage, you have $200,000 worth of total equity in your home. So if you wanted to get a home equity line of credit on your home, basically the lender would offer you a specific LTV, which stands for loan to value. Usually it's about 80%, give or take. Then they would send an appraiser out to your home to appraise the property. Let's just say the appraiser appraises the value of the property at the said amount of $500,000. The bank would offer you 80% of that, so that would bring you to $400,000 minus your first mortgage of $300,000, and the bank would be able to offer you a $100,000 home equity line of credit. With a HELOC, you basically start out with a balance of $0, but they extend credit to you on a line of credit based on that $100,000 of equity you have in the property. And you could use it or not use it whenever or however you want. A HELOC is an interest-only payment for the first 10 years, which means you only have to, minimum payment wise, pay the interest for the first 10 years. After those 10 years, then you have to start eventually paying some principal down. You could also pay it off at any time as well. So let's go over what a cash out refinance is. A cash out refi is basically you paying off your previous mortgage and replacing it with a new mortgage at a different interest rate and a different amount. So let's use the same exact figures here to keep it simple. Your house is worth $500,000, you owe $300,000, so you have $200,000 worth of total equity on the home. What a cash out refinance would do is pay off that first $300,000 loan and give you a completely new mortgage based on the $500,000 value. So let's stick with the same LTV, which is generally about 80% to avoid private mortgage insurance. You'd be required at 80% LTV to have $100,000 into the property. So then the bank would basically pay you a lump sum amount, just write a check to you basically at closing for the other $100,000. So there's pros and cons like anything else to both of these, to both the HELOC and the cash out refi. Let's go over both right now. So first, a HELOC. The pros of a HELOC, number one, is that there is very little and sometimes even zero closing costs. As stated in my previous HELOC video, I personally paid absolutely nothing out of pocket in order to get my HELOC. No appraisal fee, no application fee, nothing. Although in my research, I did come across some lenders that did require a very small, minimal application fee of say $100 or so. Another huge positive of a home equity line of credit is that you're only paying interest on what you take out on the line of credit. So if your balance is zero, you're paying zero. And if you take out 10 grand, you're only paying the interest on that 10 grand, not the full amount of $100,000 that you'd be getting out of a cash out refinance. Also, lenders really only require interest-only minimal payments for the first 10 years of the loan. So if you borrow $20,000, you're only paying interest on that 20 grand and not the full amount. There are cons to a HELOC as well, and let's go over that. Speaking of interest rates, not only is the interest rate on a HELOC gonna be higher than a cash out refinance, but it's also going to be variable. It can change, and you have no control over it. A HELOC is a variable rate line of credit based on the federal funds rate. So if the Federal Reserve decides to increase rates, your rate is being increased as well. That's just how it works. Another negative to a HELOC is that you could usually only get it on your primary residence. So if you have a lot of equity in an investment property, you're not going to be able to, generally speaking, get a home equity line of credit on that investment property. It's really just for primary residence. So let's get to the positives of a cash out refinance now. There are parts of a cash out refi that give it an advantage over a HELOC. Number one, a cash out refi, as stated, is a completely new mortgage on your property. You're paying off the old one and replacing it with a new one at a different interest rate and a different amount. So your interest rate is gonna be first locked in and it will never change, unlike a HELOC, and it'll also be lower. It's not based on a federal funds rate. It's gonna be based on general 30-year or 15-year mortgage rates at the time. So if a cash out refi has not only a lower rate, but it's also fixed and will never change, why would someone go with a HELOC over a cash out refi? That gets us to the cons that I have of the cash out refi, and let's go over them now. With a cash out refi, the clock basically starts ticking on closing day. So you start paying interest on that full $100,000 right away. Another big negative that really needs to be considered when trying to decide between a HELOC and a cash out refi is the closing costs and fees involved. There's a big difference between each one. Like I said, a HELOC has very, very minimal, sometimes zero closing costs and fees, where the closing costs for a cash out refinance are gonna be like basically any other mortgage. The specific amount is gonna really depend on what state you live in, but you're gonna have to pay for title fees, mortgage origination fees, and appraisal fees. That's most likely going to be at least several $1,000s that you're gonna have to pay either out of pocket or out of the check that you get at closing. So instead of getting that full $100,000 check at the closing table, most likely you're gonna end up with something more like about $94,000 to $95,000. And those are sunken costs. Those are built in. It's basically the cost of doing business for a cash out refinance or any sort of mortgage or refinance at all. You're not gonna get those back. So which one should you get? Well, as with anything else in investing and financial strategy, the answer is it really depends. It depends on your situation, how much equity you have in the property, and what your plans are to use that equity on. Generally, I prefer a home equity line of credit over the cash out refi, and here's why. Even though you're paying a higher interest rate with a HELOC, the zero closing costs, the quick and easy setup of a HELOC, as well as the flexibility of borrowing from and then paying down the line of credit as you see fit, makes it all worth it to me. If I decided, hey, I don't even need this money like I thought I did, I could just leave the total balance at zero and it cost me nothing. This is in comparison to the cash out refi, where even though you're paying a lower interest rate, you're paying interest on that money right away. And if you decide you don't need that capital right now, not only are you paying interest on that amount right away, right after you close, but you're also down all those closing costs that I mentioned to you. You're not getting that back. So when should you use a cash out refi over a HELOC? There are only a select few situations where I would suggest a cash out refi over the home equity line of credit. Number one, if you're already paying a higher interest rate than what's currently available on the mortgage market, and refinancing in general would be a good idea to save you money in the long term anyway, you may want to get a cash out refinance while you're doing that general refinance, just because you're paying those closing costs anyway. You may as well pull out some equity in the property. Number two, if you have an immediate investment opportunity to put that capital to use right away, where you're gonna be making more in cash flow from that new opportunity than you would be paying interest on the refinance money, that's another situation where a cash out refinance may be better than a home equity line of credit, because you have the chance to put that capital to work right away as soon as you close. Number three, if you owe very, very little or sometimes even nothing on your home, you may want to think, instead of getting a huge home equity line of credit from the bank, you may want to think about getting a cash out refi, at least taking some of that equity out. That way you can start putting it into more general investment opportunities like, retirement IRA accounts in the stock market or what have you. But if you don't have an immediate investment opportunity to put the capital to work in and want to just have access to the equity in your house on your own schedule, or if you would be refinancing to a similar rate than what you're already paying, the closing costs on the cash out refi, as well as the interest that you'd be paying right away as soon as you get that lump sum check, would be pretty prohibitive to you and most likely make it not worth it. That is it for today, guys. Thank you so much for watching and keeping up with the channel. If you got any value out of this video at all, hit and smash that like button down below. Also think about subscribing. Have some new videos coming up soon. Let me know what you think in the comment section down below about home equity line of credits compared to cash out refinances. Do you have any experience with either or both? Which one do you prefer and why? Let me know in the comment section down below, and until next time.